Hello, everybody, and welcome back to the Trade the Chain Daily Show. I am joined with Duck, the everyday guy who hates J-POW DeRosa, as well as Nick Mancini, our director of research here. Well, we've been on a week hiatus. I apologize to everybody. Just really, really sick. Knocked me the heck out. But we're back, and interesting week we're starting off with. Last week, I'm almost glad that we didn't have any episodes because we probably all would have been screaming, particularly with Jerome Powell's comments that were made in front of both the banking committee and the FOMC. That being said, don't forget, now you can try us out at tradethechain.com for 2 weeks free. To check us out, hop into the community Discord with all the other members and traders. Absolutely no commitments. And then pinned in the chat today is the newsletter, our daily free newsletter. Today is Monday, so Monday you get a deep dive, in-depth commentary and research from Nick, as well as our daily news recaps. And then Thursdays you get our coins on the move, which have been really faring quite well, I must say. So don't forget to click on that link, sign up for that free newsletter as well. We're going to go over the macro in a second. If I have a coughing fit, I'll mute and just fall off this chair to save everybody any worries. But until then, I'm going to go and we're going to check out the markets. Still under $1 trillion, total market cap at $934 billion. If you saw our tweet this morning, as you do every morning, we put it out, the hottest on Twitter, ING leading the way. You got AirSwap AST, you got Reserve RSR, which was a good trade. We put that out on a tweet the other day as well. Going down to the most bullish coins of the day is ZLW, followed by Doge with an 83 score, up. Down 2%, 6 cents. So maybe we're looking at a turnaround here. We have REN, 79 score, up 3%. Most bearish coins of the day. Well, I'm not even going to mention the last coin on the bullish because I don't believe in that coin. But going over to the most bearish coins, we have Spell leading the way for the most bearish with a score of 22. T-Fuel. Everybody loves T-Fuel. At least last year they loved T-Fuel. A score of 28, Dash 29. TRX 30, and Bake with a 31. Heading over to the coins page, everybody up for the hourly graph, but I'll tell you this morning it wasn't looking that great. Nick's going to break that down for us, but we're still hovering below 20,000. Can't seem to break it. Ethereum stepping down over the course of the last week to 1324 as it stands now. Look at that. Tether's still $1. Unbelievable. If we go over to the Bitcoin 7-day price versus sentiment graph, you can see that we're still bearish on the sentiment for Bitcoin. Most of the trailing 7 days, price has been extremely volatile, as everybody knows, especially if you're trading this stuff. But it looks like sentiment is rising more towards the neutral mark. And then I just want to point out the XRP chart here, price versus sentiment, price in the blue, sentiment in the green, red. A lot of news coming out of Washington about, and on crypto Twitter, about the SEC and the possible ending of a lawsuit coming soon, which, depending on which way that lawsuit, rules, is going to be a precedent in crypto moving forward. If XRP beats this lawsuit and we get a not a security verdict, I mean, that could send XRP for one up sharply. You can see sentiment ballooning most of the trailing 7 days. As a matter of fact, the price is up 27% for the trailing 7 days. And let's take a look at that 30-day, up 40% for the 30-day. So who knows? I'm going to ask Nick and Doug if they believe XRP is going to jump on a news of not a security, but we will surely see for sure. All right, Nick, take it away. Let's blow up these charts.
Yeah, so I think probably the most interesting thing is the difference in ETH versus Bitcoin sentiment. We had a big spike for ETH over the weekend that's kind of drawn down, and we've actually come up a little bit for Bitcoin. So very interesting to see that recently. Obviously, Bitcoin's still more or less bearish, and Ethereum, still in bullish territory. So interesting variance on that. But even more interesting is the action that equities have taken. So we opened right around here. We rose higher. We dipped lower. So we basically have deviation from the top of the trend, deviation from the lower end of the trend. Clearly, it's making its way back into the trend. So we said this on the daily show, really needs to crack through 36.75 and flip that. And then it needs to crack through 3,700 and flip that to continue higher. We obviously still have a lot of confusion around dollar strength versus, other currencies, given the issue with the pound, I guess, last night into this morning. And so, dollar clearly topping, I don't want to say topping out, but obviously getting a little tired here near its high yesterday of 114 points, about 0.5 on the dot. So be very interesting to see how that happens. I did say on the daily show, we could just kind of hang out around here in range and before moving higher. But also, if it does end up breaking through this moving average, the 50-day moving average, then that would spell some dollar, at least some temporary dollar weakness, which could give strength to equities. And of course, if equities are looking strong, then one has to very much one cannot discount the fact that although equities have made new lows and lows back towards the June levels, which I have outlined here for Bitcoin around 17.7, crypto is not. So right now where we are is we technically in equities we're right here on the crypto chart. So the fact that we are not at equal levels with the S&P, given the correlation, is definitely something to take note of, due to the fact that relative strength is definitely important given how closely you've been tracking this correlation. So we don't have anything definitive yet. It's been unable to close above the 100-day moving average, although we do have, 200-day moving average on the 1-hour chart, I should say, which is this blue line. But I should note that since we broke above it early this morning, we've wicked above it as well. And we're obviously, higher than the 200-day moving average and pushing into resistance. So if we can break through this, then the next natural target would be, 19.9 for Bitcoin, but it has proven difficult to break above 19.7. So that's definitely on the high end if we can break higher. And then obviously if we're rejected, then it's coming back down to at least the low end of this trend, potentially pokes its head out on, in a bearish way. Very similar for ETH is, nearly identical. I just kind of have these meme lines together just to show the coiling of price action since last week, but very similar to Bitcoin. If I remove this, we can see, 1 hour, 200-day moving average, it's now, more or less above it, but has not, had a strong close above it, getting a little bit oversold stock, same with stock RSI. So, if we want to see this break up, come back down, and then move higher back up to the 1400 to mid 1400. And then alternatively, if it breaks down, then we're back towards this part of the trend, potentially poking head out there, depending on equities weakness. So I think that's a very tough scenario for the market. Basically, everybody is expecting, continued equities weakness, considering it's, at the recent lows from June, and it's quickly approaching where you would expect the next range to be, which is where we heavily traded in the spring and summer and fall of 2021. So you would expect something like this, into Q4 and then hopefully rise up. But obviously we've not broken beneath those lows for equities. So, anybody's guess is really as good as mine right now. We kind of know where the risk is defined. It's tough to obviously short at support. You typically want to go long, but obviously, the macro environment's not looking very promising or inspiring. So very tough to put, have conviction for long. So if you really don't know, or you really don't have a decision to make, then I would not make a decision. I would not gamble, your money. But I feel that more downside is likely than upside, just given where we are. At best, maybe we just continue to range and not really poke our head out in either direction. That's really the best case scenario for the market right now. But things do seem to continually be pointing in the direction of heading farther south. So I'm very much torn as to what's next. We do have some key economic data this week. We have real GDP on Wednesday, and then we have PCE, or no, we have real GDP on Thursday, and then we have PCE on Friday, and then we have a bunch of Fed governors speaking this week. So I would expect some minor fireworks, but I think the market, if it doesn't tank heading into real GDP and CPE, then those two data points will likely be kind of how we move into the weekend.
Interesting stuff. Yeah, I'm feeling more or less negative on my end as well. I think we have a chance to dip lower considerably, particularly with Bitcoin, to what we've spoken about previously. I did have the thought process of you, Nick, where I thought we had simmered out for a little bit, and this could be kind of I hate using the word bottom. It's so definitive, but sort of like a bottom range. But now I'm feeling more uneasy on that. That being said, I want to go back to the XRP thing, get your guys' opinions real quick, because there have been members in the Trade the Chain Discord looking for venues to trade XRP perpetuals. And, we have this ruling. If this thing comes to a close where XRP is deemed not a security, where do you think this thing is headed? Are we going to shoot up on the news with XRP? Is this thing going to be what everybody was looking at it to be in 2018 when Doug first bought it? And
22 cents.
22 cents Doug bought it. Went up to $3 and like 60 cents.
313, and I did the round trip, and I eventually sold it for 28.
Oh yeah, he bought a round trip airfare on that and sold it for what he paid. But right now we have, we have XRP around 47 cents right now. Nick, could this thing have the potential to double on or higher on good verdict?
I would say that trading the verdict, I would assume, and my current outlook is very much like trading the merge. It's a over time it's bullish, but the trade is clearly in anticipation of the ruling. So it does seem to me still like a sell the news event. But like the merge, the catalyst of it actually happening is still bullish and will immediately inspire traders. And I think anyone who is long and continue to be long would start closing longs or closing long trades around whenever that ruling comes out. So I would very much expect, just like the merge, is a lot of volatility leading up to the event, a big spike up on confirmation of the event, and then a sharp sell-off after the event. And that's how I would trade it. I would not go long expecting the long trade to really work out after the ruling comes, because that's still, pardon me, everybody is trading up the news, if that makes sense.
I agree. I almost feel like this trade is going the way I thought the Ethereum merge trade would go 2.5 months ago, which it didn't.
I would think too that it'll help maybe some new listings or new projects come out. If that gives them some clarity that this is not deemed a security, then other projects will come to light and come out and get listed. But I'm sure there's some that are holding back now, saying, hey, we don't want to list and then be perceived as a security. So I think that will open up some new things as well.
Yeah, well, let me ask you this. Now, there was a lot of exchanges delisted this when the lawsuit first came to light. It was a big blow for XRP. And a big blow for the XRP army. I'm neither with them or against them. I'm right down the middle. But to have it delisted made everybody it was kind of the wind out of the sails moment. Now, if XRP, if it rules negatively for XRP, do we see a literal crap storm come down on U.S. crypto exchanges and the assets they're listing? I mean, do we literally see places like Gemini go from 18 assets to 2 assets? What are your thoughts on that?
I would think that. I honestly, they don't want to take the liability, obviously, right? So I would think that they're going to go through every white paper and do their due diligence, obviously. But yeah, I can't imagine that's going to be good for this ecosystem.
Well, no, and that's why they delisted XRP to begin with. They didn't want the reputational risk, right? So, and now you have J-POW, Jerome Powell saying, hey, Ethereum changing the way it operates it could potentially put it into a security class on its own after more or less the regulators cleared Ethereum from being a security. Nick, what do you think the negative aspect of that is? If they rule XRP loses this, do you think that might be a catalyst for them to come down on Ethereum and say, hey, listen, it is a security now that you changed?
Well, I guess their legal argument may strengthen, but then there's already precedent about Bitcoin and Ethereum being a commodity. So there's, I think, I don't, of course, I'm not a lawyer, so I don't want to speculate too heavy, but I don't think that that would immediately negatively affect Ethereum. But you probably would see any coin, and of course, I don't have a list handy, but any coin who may be a security that has yet to be defined in any court case would likely potentially take a hit on the heels of this, at least immediately, very similarly potentially to like the pound, which means it falls a quick 5%, rises 3%, and then it kind of stagnates around, down a couple percentage points. So I would expect if it did not go in the way of the way XRP holders want it to, it would probably likely impact the broader cryptocurrency market in one way, shape, or form, because the market would then have to digest an undefined amount of cryptocurrencies potentially being securities and potentially being delisted and potentially having negative news around it and things like that. So fingers crossed it does not occur, but that you're right. That could be a black swan catalyst if it doesn't go the way that XRP holders want it to.
Okay. All right. Quickly, I want to jump into the chat real quick. We had Delboy K ask about Voyager if there was any news. There is no. There's no new news on Voyager. We have potentially 3-4 bidders. I think an article leaked last week. That Binance and FTX are one of them. So no news there. The auction is still going on. I believe they reconvened today, and the CFO quit last week abruptly. That was big news. So we don't know exactly what happened around that departure, but they published a PR release shortly after rumors started spreading. Sleepy Puppy Crypto, one of our favorite gang members. What is the indicator you use on the right side of the chart, the yellow and blue there, Nick? Is it the volume?
It's called why is it not on my Ethereum chart? That's weird. I'm sorry, I was just looking at the wrong chart. It's called VRVP.
So we got
so basically if you go to TradingView and click indicators and type in VRVP, it'll immediately pop up for you.
And what is VRVP? So what is it? Is that basically the volume?
Yeah, it's basically a volume profile. So it just shows you in a very wide format where buys and sells are located at that time, and it'll automatically update depending on time frame as well as you moving around the chart for how wide the bars are. So right now it's only got the range of a few grand for Bitcoin, but obviously I can zoom out and we can make it several grand. And then it'll update and it'll show you where large amounts of liquidity are sitting on the chart, which typically end up coinciding with POCs, which end up being magnets for either attracting price or unattracting price. I couldn't think of the opposite of attract.
It's okay. And so when there's a good little educational moment we'll take right here. So when you see a pocket of liquidity, what does that generally mean as far as the order book is concerned? That there will be sellers or buyers?
So typically, like a pocket of liquidity will act as a lot of times you'll see kind of like traders use the magnet emoji, and let's see if I can. So you'll see a lot like this where someone will be like, okay, it's a magnet to this POC because price action survived, this level, traded around here for a while, And then, this basically level of liquidity is you would expect it to be attracted to because of where the value on the chart is. So, and it's kind of like a psychology within psychology. It's because if you're feeling bullish, you're picking a target as to where you feel bullish. And then this also would coincide with both the 100-day moving average, the 200-day moving average. There's a lot of buys and sells here. There's a gap if it can get above this current level. So basically, kind of call this quote unquote a vacuum like space. You move, there's less resistance in a vacuum. So, and of course, but this is only as we can tell on the chart. Price could start moving up incrementally, and then all of a sudden market makers move this liquidity down and then screw everybody over who entered a late long or didn't take profits, and then you end up getting round tripped and stuff back down. So it's merely a guide, but you would look at it because there's a POC here, because there's a lot of liquidity here, because there's confluence here, you would expect price to potentially move up here before heading back down if your bias is still bullish or bearish. So that's kind of how you would look at that style of trade. And then you can even get a little bit more granular with it by looking at the true market profile, which is where we call in value or outside of value. So value would be where this like the highlighted numbers or the highlighted bars are, which coincide with this profile, but it's showing you now that it's currently outside of value because it's in the grayed out amount. So typically you would want for continuation, you would want this to continue to obviously move higher relatively quickly. And then you would want this to just be more or less buy volume rather than sell volume coming in. So the fact that it's outside of value and there's a massive amount of, I wouldn't call it massive, but there is a large amount of sell volume there. Basically you want to see that cleanly slice through this level right here, because you can see how value starts to wane. So if it can slice through here and continue going strongly higher, that would be a good sign. But since it can't, since it's struggling, it's likely to at least move back down before moving higher, in my opinion. So that's kind of how you would use those in conjunction with each other.
Thank you, Nick. All right, let's move on over to Doug. Mr. Doug, I wish the screen could just put your face up here right now. You're an angry man these days. Okay.
I'm not going to be like Jim. I'm not going to be like Jim Cramer in 2007 and 2008 when he was yelling, "They know nothing," and they just went on that tirade. I'm not going to do that. So,
well, last week was horrible. Our emotions were played with. Our wallets were played with. And you're very sensitive to certain indicators out there like interest rates and mortgages and 10-year and stuff like that. Tell us what was going through your mind. What is going through your mind?
Well, I am still mad. I'm just not going to yell, but I'm mad kind of on twofold things. But the second part, the latter part, plays into what we do here at crypto, right? We're passionate about it. But the first part is that just going back through some videos, Chair Powell and Secretary Yellen, early as last May, we're talking now almost a year and a half, we're saying that the inflation is transitory, right? And they were using that the supply chain post-COVID was really the big reason. And again, these are our leaders, right? These are supposed to be some of the smartest people in finance and economics. Like anybody knows that minimum wage has been going up in numerous states for the last couple of years. Obviously, that's one thing. And then this big giant housing bubble that we've had for 10 years, people have noticed in their neighborhoods, rents have been going through the roof. And just common sense, those two things are sticky, right? They don't drop. That's not transitory. Your rent rarely goes down. And minimum wage is not like they're going to move those people at McDonald's from $22 back to $15, right? So for me, that's just absolute stupidity. I don't know what our leaders were thinking. And so because of that, how that ties into my angriness now towards crypto is that for the last, 10 years, you've had this acronym called TINA, which stands for There Is No Alternative. And that was, people had to put their money in the stock market, right? If you're a retiree, CDs weren't returning anything. Money markets weren't. You were literally compelled to put your money in the stock market. And so now there are alternatives, right? But you and I, Alex, got the email on Friday from Robinhood. Robinhood's paying out 3% on money markets. The 2-year treasury today, the 2-year note, I think right now hit 434, which in New York, where you used to be, that's state and local tax free. I mean, that's really frigging attractive, right? So how does that relate to crypto? There's people in crypto that obviously invest or speculate. That's one portion, right? But then there's others like us that did put money in USDC to get the yield side. So, let's think this through. If you're getting now probably compressed yields going forward, given what happened to Voyager and Celsius on USDC and some platform, let's say it's 5 or 6%. Why the heck would you take that risk for 200 basis points when you can get, again, 4.25 on a 2-year, 2-year note? Now, obviously USDC is liquid. The 2-year note locked up for 2 years. But my point is, you're taking 2%, 200 basis points risk to be in the crypto ecosystem, to be with some other counterparty. And then if it's anything over and above, let's say 6 or 7%, again, we just learned like, wow, there must be something bad there, right? Which again, Voyager, Celsius, to get a meaningful return of 9, 12%. Wow, are people ever going to do that again? Because they're going to say, I've been down that road and that was a friggin' disaster. So we're not going to probably see those 9 or 12s, right? So my diatribe to end is like, I'm not married, but Alex is. But it's like, Alex, how do you have that conversation with Kira? Like, yeah, honey, we're going to get 7% on curve finance. She's like, what the hell's a curve finance? And why would you do that?
He doesn't want to know.
4.25 on the 2-year note, right? So for me, thanks, Lucas. So for me, this really is a game changer because the Fed waited so frigging long. They didn't have to jack up rates for, to this extent. And now they're going to continue to do this for at least the next remainder of the year, obviously, maybe into the early year. Of course, they're quote data dependent, whatever that means. But yeah, I think that really affects our ecosystem. And it's unfortunate because some of us were kind of yield whores, pardon my language, that we were getting really nice returns on VGX and Celsius. And now I don't know if that's me now and I have liquid cash. I mean, 3% on Robinhood doesn't sound awful, to be honest. And if it's USDC and it's on FTX and they're paying 5, I'm going to be like, all righty, do I really know what FTX is doing with their investments and stuff? And they have a lot of private investments that haven't been marked to market, right? So who really knows what's under the hood there? So that's the end of my diatribe. But yeah, I'm pissed off. I'm pissed off, Alex. Thank you.
I like it. I like it when Dougie gets fired up. He's very rarely fired up. He's such a soft and gentle creature.
I am.
No, you're first of all, I don't think any spouse shows the other spouse their wallet address for crypto, right? They don't want to ever admit to losses. No. But two, that's one of the things that's making us smarter as investors and participants in crypto is now we see the lesson learned and you go, hey, 8% for a yield, 10% for a yield. And I'm not even talking about degen crap. I mean, I saw some tweets over the last week with like 400% yield and stuff like that. And, that's not 2022. And it's definitely not going to be 2023. But the average consumer, the average participant now sees 8% and they're like, whoa. Why are you giving me 8%? How are you giving me 8%? And that's the hard lesson that we had to learn in spring of 2022. There is loan arbitrage. I mean, Doug, you and I were part of loan arbitrage on the institutional side. It is a legit way of making money. It happens in the everyday world in TradFi and crypto. The problem is, what's the risk management about it? If you say, hey, listen, you're going to yield 8% on USDC, and this is how we make it, and we never deviate. We ask for 150% collateral for LTV to Bitcoin, and we take it every time. Just because they're our friends, we don't reduce it. If the market goes down the crapper, we're able to liquidate at this level, and we get all our money and more than that in most cases with people who do 150 to 1 because the triggers for margin calls are very tight. And you say, listen, we're protected. Here's the collateral back,
I would say this too. It does, because a lot of us do have VGX. If that does come back in some form or fashion, and some of the names being thrown now, Cross Tower, maybe there will be a use case for VGX. But again, why would you hold a bunch of VGX unless you're a super active trader and you're getting that nominal discount to get an extra 50 bips in yield? Again, what are they going to look like in the future? They're not going to offer 9% because people are going to be like, wait a minute, you just burned
No,
it.
no, no. But even if you're getting, the norm has changed.
Right.
It's not that, the norm has changed. Listen, you have let's, for example, VGX token, and somebody is able to get 3 or 4% on cryptos because they're a navigator, explorer, or whatever. 3-4% is still better than having it in the bank. 3 or 4%.
True, but my point is, why hold a bunch of VGX to get 4%, where you could just get that now in Robinhood, be totally liquid? You don't have to be compelled to hold a bunch of VGX, is what I'm saying.
Well, yeah, but money, I get what you're saying. I mean, where people were going with crypto was the static nature of the rate rather than variable, right? So we're going through a time where APY is good on, say, money market, but next year it may not be. You know what I mean? That's all I'm saying. It's just it's a variable rate thing. Well, Doug, you used up a lot of my energy, man. I've been sick.
Man, I'm sorry, man.
It's okay.
Well, the good news is that Powell said like slower growth and all this is going to go on to 2025. So we still have like 2.5 years to discuss this.
His PR people suck. His PR people really suck. I mean, and the line out, no soft landing in sight per J-POW. I mean, you're an ass.
Well, you know what's crazy, and Lucas can certainly chime in the chat, but we've discussed how many companies have laid off people. We've given a laundry list, whether it was Ford with 2,000 or Klarna, and the employment rate has only bumped up from 3.6, I think, to 3.9. And their mandate, basically, some people have done the math, like we've got to move to like 5.5%. I mean, there's going to be a shitload of people, pardon my language, that lose their job, right? So I'll ask Nick, because we got to get Nick in the conversation. Nick, in terms of the pain is like an opaque word. Where do you think we are in the pain cycle here? Are we in the 3rd inning, 7th inning? Where are we at when he says pain?
I don't know, because I expected us to be seeing it a little bit more, and the fact that unemployment has not risen. I mean, we have seen some tech layoffs and stuff like that, but it hasn't been bad across the board. And I'm just trying to think like how much shrinkage from, consumer discretionary and like, let's say like food and services and like other things around that, like how many people are going to start laying people off? Like consumers aren't really not spending as much. Like all the reports are that although credit cards or credit bills are piling up, like consumers are still more or less well capitalized. It's not like financial crisis levels. So, there's on one side, you could say that we're not even, there yet, as Joe Carbajal said in the chat. Like,
let me tell you something. If
Joe's in the first inning, what?
If Joe Carabal's next comment is we're still on the drive to the stadium, I'm blocking you.
Yeah, I mean, so I understand that we still haven't entered the first inning because it takes a while for the rate effects to be felt, and clearly, the recession and the kind of the landing discussions by the banks and stuff have started to say, oh, we'll see the final dip in 2023 and things like that, which is possible. And obviously we did just have a negative GDP print. But, at the end of the day, could inflation come down without murdering unemployment? Yes. And I say that uncertainly because I really don't know. But it can't. There's the still looking on the schedule in the fridge at home. That's funny.
I'm sorry. I first of all,
we need to have Joe on as a special guest.
Nice guy. I like him.
No, but I mean, when it comes to that, I think that things will definitely get worse before they get better. But I'm just trying to think about how bone crushing can it be before we hit the bottom? And if we haven't even felt a bottom economic wise, then it really does worry me for where we're at on the charts, because the charts will generally bottom before the economy does. And so clearly we've got these, we have so much turmoil going on, but then you come back to the data and you're like, unemployment's not rising, customers are well capitalized, but inflation still seems to be a little bit more stickier than we want. So of course the Fed's are going to continue to raise interest rates, and a terminal rate of like 4.6%. We're only half that. And obviously we're just dipping our toes into quote unquote bad economy. So, just based on that perspective, with another 2% to go minimum likely, things should continue to get worse. But after halfway through the process, we're barely feeling the effects of what the Fed wants us to. So, is the economy more resilient than we expect? I think that is certainly plausible. And so I'm currently torn on how bad things are going to get, but I assume a little bit incrementally worse. But I don't know if sky is going to be falling, if 08 is going to happen, if housing is going to crash. Of course, China is dealing with its own issues, and so we'll have to worry about that contagion in the U.S. as well. So there's definitely a bunch of red herrings. There's definitely opportunities for black swans, but and I think it's more likely than not that we incrementally inch lower in terms of economic progress as well as the stock market. But is there some sort of black plague coming for the economy? I don't really think so in the grand scheme of things.
And when it comes to tech companies laying off, right? Tech companies and traditional side of capital markets mirror the crypto side very much, right? So when tech companies are laying off, I don't grow overly concerned in the least bit. I don't care that Facebook lays off 5% of their people or Twitter or whoever else. What begins to concern me is following the new home builder numbers. That's a leading indicator in crap storms. We've seen the housing market stagnate as of now. Where's that pendulum going to swing? Is it going to go down hard or what? I think you guys are right in the fact that if I start seeing CPG companies, Playtex lays off 20% of their bra group, that's when I get worried, right? So I think the consumer
if Calvin Klein's firing all their underwear designers, that's when you're not when the strip clubs are empty. It's the lingerie designers is like your indicator.
The strip club was the old medium that we would use.
I mean, we can call some OnlyFans people and see how much their revenues declined over the past 9 months.
No, that's a good one, and we should get in touch with some OnlyFans people and stuff like that because
that's why we should get in touch with them.
Well, it's kind of like you laugh at me, but it's like The Big Short when they went to the strip club and asked strippers how many homes they bought. It's just funny the way
you said it, like, maybe we should get in touch with some OnlyFans people.
I think we're missing out on another great indicator, guys. You want to make fun of me, that's fine, but if OnlyFans revenues are declining, that's a hard.
I'll connect Alex with some of the male models.
That's consumer discretionary funds right there, and if people are killing that first, I don't know. It could be bad.
No, it's true. It's true. It's funny. The people that I know that do OnlyFans, I was joking about what all of this stuff that we're talking about. Like they looked at me they're like, oh, we know there's a recession, and I was like, interesting.
Listen, jumping into first, Del Boy, I'm still a little sick. My mind's not veering. It's probably just messed up from all the drugs I've been taking trying to not be sick. But, the comment you made earlier about it'd be nice if these billionaires paid their fair share of taxes, I could actually make an episode with Doug on that. And there's a reason why I disagree with that. There's a reason why I agree with the way the tax code is set up for the wealthy. I'm not one of those wealthy people, so it's not self-serving. But it is one of the things that make the wheels move around in the capital markets economy and are important for driving it. And it's not a cause for any sort of economic divide or gap between, middle class and rich. That's for sure. But I definitely appreciate that comment because it makes me want to take that up in an episode one day. Guys, thank you for joining us. Really appreciate it. Sorry for the holiday vacation last week. We will be back tomorrow. Also, I want to point out this. I want to point out that Nick's show is now on this channel, his daily show. So if you go over to the old Trade the Chain YouTube channel, you might be pleasantly surprised depending on who you are. But there's no shows over there anymore. His show is here, midday Eastern time, followed by the Daily Show now. So any parting words, Doug? Are you going to be upset again tomorrow?
No, I will say that I follow some other people out there that do technical analysis on equities. They're saying a little bit of a bounce this week, and then perhaps later in the week, we probably will go through the old lows. And so obviously that may affect obviously the crypto markets as well. So my guess, I think we see 15 before we see 25, but that's
all right. It's all right. You want to give props to the Oracle. He deserves it. I know who you, the Oracle. That's your boy over at Market Rebellion.
Yeah, AJ Monty does have some pretty solid technical analysis.
AJ Monty does, man.
AJ Monty's good, yeah.
They just did the RebelCon over out in Texas. So,
yeah.
Folks, we've taken up too much of your time already. Have a great afternoon. If you're based in the States, have a good evening in Europe. And if you're in Hawaii, good morning. Enjoy that cup of coffee. We'll be back again tomorrow. Apologize for being raspy and sick and for Doug's diatribe. We love you guys. Thank you.